Hello dear traders, welcome to this new video of the MCA Trading Made Simple series. It's recommended that you watch them from one to the last one in a chronological way. Today we have episode 8 and we're going to talk about the so-called squeeze mode. This is a very important video. It's a very powerful aspect of the market causality. It's loved and it's feared because if you are on the wrong side of the squeeze, hell is waiting for you. If you are on the right side of the squeeze, pips are raining from the sky. Okay. So how does this look like in the causality? We have the squeeze indicator and we're gonna look at it from some real life screenshots in a minute. But conceptually, longies and shorties are kind of balanced. Okay, they are not like none of the two is dominating, but at some point what happens, more and more dumb money longies enter the market. Okay, they're buying the price thinking there's going to be a breakout or whatever. Okay, so suddenly we have loads of dumb money buyers and they create what we call a squeeze mode. Okay, what does the smart money do in response to that? You guessed it. They go down, 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 down. Okay? They conduct a squeeze against those dumb money buyers. Okay? And this can even carry on over weeks and longer. Yeah? Those are the situations in the market where the market is just falling in one direction without even any proper reversal in the other direction. The only reason why this happens is that longies, dumb money longies, keep on buying into the markets. Okay, they may have some fundamental analysis which in logical terms makes sense. So they say, you know what, the dollar should get weaker, so we're gonna buy and we should buy again, and now we want to average down and we buy again, and other traders think, you know what, this is really cheap now, so I should buy and get some cheap prices. By the way, I should elaborate a little bit on this. So for some reason the human brain is really prone to that and often falls victim to that. Okay, people think, oh, you know what, this is really cheap now, I'm gonna buy, and then people have this calculation in their head. What happens if the price reverses up here? I may even get a good risk reward by placing my stop here, placing my target here, not realizing how difficult it is to catch actual reversals. But remember, the dumb money is blind anyway, so they keep on buying and the smart money mercilessly pushes the market down. The dumb money loses every time and the smart money wins every time. This is literally how this works. Now the same example with a short squeeze, it's the same thing, just the other way around. Okay, some shorties enter the market, they don't stop selling into it. Okay, the dumb money sells and sells into the market. They may have all kinds of reasons. They think, you know what, the next GDP is gonna be so good, and you know, I have read this research article and now unemployment should really go down, and so the dollar should get stronger, and so on and so on. So what does the smart money do in response to that? You guessed it. Okay, they go up, 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 up. Again, sometimes even over weeks and weeks and weeks. Okay, the dumb money keeps on selling and the smart money pushes the market up against them, taking their stops, eventually taking their long-term stops. Okay, and we see that kind of situation clearly via our beautiful squeeze indicator. Okay, if the line goes above the middle line and stays there like here, that means sellers overall are dominating the market. So the dumb money tolerance against sellers is low and the dumb money tolerance against some buyers is a little higher. Some of the buyers may be even allowed to win. Okay, remember last video about the dumb money tolerance. That means, just as a little footnote, if you have a bit of longies coming into the market, yes, if they get lucky, they may even be allowed to get a bit into profit. Yeah. That's why we have some pullbacks at least now and then. Okay. So what happens eventually? Eventually the squeeze collapses and then prices revert. Let's also look at that. Okay, so at some point, and sometimes it happens early. It's not that squeezes need to go on for a long time. Okay, sometimes you have a situation like this. The sellers are coming in, they create a squeeze, but then the sellers leave the market. We call it a squeeze collapse. And in return, the price often reverses. Okay. So if you see that the sellers are leaving, like in this example, leave the market, then often price reverses, and this can be a reversal setup. Yeah, but these are a bit more complex to trade. Okay. And if you're not sure whether the sellers, the money has collapsed, then stay out of the market. If you see, for example, that there's a 4-hour reversal or something going on and then the sellers leave, this can of course be tradable. Okay, we're going to look at that as well in a minute. Let's say these are 4-hour channels and you see that the upper channel is reached. Okay, this can be an opportunity to sell back into the range. Okay, right, let's look at some real life examples. So here we have dollar Canadian, and we have a real textbook squeeze. Look at that. Okay, it was the end of last year. That was the moment when the price didn't stop going up. Okay, it continues up and up and up. Why is that? The answer is delivered by the MK Web. Sellers are coming into the market, creating a squeeze. Okay, look at that. Okay, textbook squeeze. This is a squeeze against the shorties, a short squeeze. Okay, sellers coming in again, selling. Yeah. They dominate the market, they keep on selling. So what does the smart money algo do? The algos, they push the market up against the sellers, taking the stops, taking the LTS, killing them. Until the big stops are reached. Look, they even did an exaggerated stop hunt to the upside. And then of course at some point, what happens? The sellers collapse because they're all cashing in their losses. Okay. Once they collapsed, what happened? The market reversed in the opposite direction, as I've just shown you. Okay, these things can unfold over days, but you need to be aware of those dynamics in the higher time frames, even if you do short-term trading. Okay, so this is the magic. Now, if you see a squeeze being there and short is coming in and you're buying, try to hold that market. Okay, it may go hundreds of pips in your favor. There are some people who are just waiting for this, even though it doesn't come every day, and then they just try to ride this over days. You can make a lot of profit because every time people around the world believe the market will reverse, and it just continues, and there's a failed reversal, and the ones who are long, they're just making more and more profit every time by not doing anything, but just holding. Okay. Once it has collapsed, you need to either protect your trade or reduce or get out, or a combination and so on. Very powerful. You literally see when the market is in an actual trend mode, not in a fake trend like here where there's whipsawing. You can't find those real trends without this proper setup, institutional grade tools. The price doesn't tell you anything. Look here, it broke out. Indicators which are price based tell you, oh, you buy now, and it's exactly wrong. You have to know what's really going on behind the curtain. That's why you need the MK Web. Okay, that's why we go through all the pain of being able to offer this. Because this is a real edge. Here you can differentiate in an objective manner. You see? This is the power of the causality. We're not talking some silly price patterns which are not consistent, okay? And make a massive story around it and give it fancy names like all these price action traders recently. We know the actual market database, okay? This is what's important, nothing else, okay? So let's see. Another example here, Euro Aussie, okay, the same thing. We have a massive squeeze suddenly being created by all the shorties, and what happens? the market just explodes and runs in the direction and goes after those shorties. Okay, massive price moves, hundreds of pips. If you place correctly here, then you're gonna love the squeeze mode. Don't ever be caught in a squeeze mode and try to hold it over hoping that the thing will collapse. This is the biggest mistake you can do. You will blow. Like all these reversal traders who then often are over leveraged and don't even use stops, they get completely crushed in those squeeze modes. Okay, that is why mean reversion is a dangerous game. Okay, because eventually people get caught in the squeeze. They try to reach a high winners ratio because there are always some pullbacks, but the risk reward is so bad that it's just a question of time when they blow up. Okay, don't trade against the squeeze. This is a golden rule in market causality trading. Okay, don't. And if you get caught in it for whatever reason, take your loss and get out. As simple as that. These are situations where you need to act, and you can't just hope and stand there. Okay, and gamble. Don't gamble in forex. Okay, let's also look at an example for squeeze collapse, like here on the forward chart of Aussie. So, okay, where the squeeze against the down money long is, the price goes down, then the low, look what happens, the low gets cleared again and again and again, and what happens? They collapse. Okay, well, the squeeze collapse, a very significant one. Okay, because the lows get cleared. Look, this is the stop hunt, this is the stop hunt. Okay, the longies get kicked out with this drastic down move. Okay, those longies are cashing in the loss, they're leaving. What happens is squeeze collapses, and hence the market does a complete 4-hour reversal in the opposite direction. If you try to trade a 4-hour reversal and you have the collapse on your side, that can be a beautiful setup, because those are the situations where the market just snaps in the opposite direction with a lot of force as well. Okay, but this is generally for maybe intermediate or advanced traders, I would say. Okay, because you need to wait until the down money has been cleared. Once you see the collapse, you can go for it and everything else aligns. Okay, this is so important. I really would like to stress it. This is another gem of the market causality. You don't find this anywhere. Okay, this is so powerful. It literally shows you when the trend is there and when it is not there. Here, you know, the market may mess around, maybe some range trading and whatever, but you know, you can do short-term trading and so on. But whenever this happens, be aware. This is a sign that something big is going on. And some short-term traders may even say, you know what, every day I'm gonna sell, I'm gonna sell, I'm gonna sell, I'm gonna sell for weeks and weeks. That's when they make really a lot of profit. Okay, make loads of profit just by literally doing a stupid trade in the same direction day after day. Some people, they just hold, but don't try to be cute and to trade against the squeeze. This is not a good idea. Okay, you needed to collapse the trade against it. Okay, so pay attention to this. Our MK web, it has 2 squeeze indicators. It has another one on the bottom, and you know, both together are very powerful. But I think for now, to understand this concept here is good. We try to really show everything here in baby steps, and yeah, I hope you like this video. Lots of love.